What's up, everyone? Welcome back to Smart Money Academy. This is the 26th day and the last day of the Smart Money Academy on YouTube. And I just want to say, guys, if you reach this point, I'm very proud. You've already made a lot of progress, and now we're going to build a trading plan tailored to you. Okay? So, to prepare for this lesson, guys, just make sure you know every concept from the other session, or at least you have a good understanding of them. And now we're going to get started. So, the first step to making a trading plan is to know yourself. Okay? Are you impatient? Are you impulsive? Are you patient? Are you willing to work full time? Do you have full availability? Are you reactive? Are you a structured person? What are you? Okay, because everybody is different. What that will determine is whether you should be swing trading, day trading, or scalping. Okay, scalping is you enter and you close the trade within minutes. Day trading is usually hours to maybe a day or two, and swing trading is anything from a day over. Okay, you could stay in the trade for weeks, for months, for years. Okay, well, when you reach years, you're more of a holder, of a hodler, as they say. Step number two is to choose your tools. All right, guys. So you want to keep your draw liquidity. You want to keep your trend. In any strategy, if you don't have that, you're going to lose. Okay. After that, all that comes down to it is picking your 1 to 2 entry triggers. Okay, is it market structure shift fair value gap? Is it inverse fair value gap SMT? Is it equilibrium tap with a breaker? Is it the unicorn setup? Whatever it is, you guys need to figure that out on your own. But you need to test it, back test it. Don't change it. They all work. You just need to be able to prove it. Um, you want to make sure you never go long in premium. You never go short in discount. Okay, that's very, very important to make the probabilities be on your side. Just remember, guys, simplicity brings clarity, okay? So just keep working on whatever you want over and over and over again, and one day it'll all click. I say, I promise you. The third step is to keep things, well, keep risk realistic, okay? So how much risk per trade? Do you have a daily, weekly loss cap? Max trades per day, per session? What's your stop loss logic? Is it structure based? Is it liquidity based? Do you have partial exits? Do you trail your stop? A good plan manages the risk even before the trade is planned in place, okay? So I'll give you an example really quick of me. Let's say I enter the trade here, okay? Well, um, let's say this is the trade I want to take, okay? Like a 1-2, I'll make it a 1-2, okay? Like a 1-1, like a 1-2 like this, okay? At 1-1, I go BE, or if I don't like the way, or if there's liquidity there and we're reacting off of it, I might close the trade completely because I can't partial on my account. So it's either I go BE, or I close. And if I go BE, then on 1-2 I close. Okay, then my final take profit. But some people like to trail their profits or their stop loss. Some people they have like big targets, big dreams, and they just kind of like take half off here, half off here, half off here type of thing. You guys do know that half here is 50%, and then half here is going to be 25% of the initial entry because it's 50% of the 50%. So yeah, you guys need to decide what to do with that on your own, whatever you're more um I don't know how to say it really, but whatever you're more comfortable with, and whatever won't make you go on tilt. You know, are you more somebody that's going to go on tilt, or is going to be more prone to over trading and over leveraging if you get left out of an entry, or if you get stopped early and it goes to your profit, or all those questions need to be asked and they need to be answered on a piece of paper because you need to figure out a way to work around that so that you don't go on tilt. Going on tilt is what destroys the accounts. Okay. Step number four is to test and adapt. Okay, so you want to backtest your setup. You want to journal every trade. You want to enter your entry logic, your screenshots, your emotions. After all that, you can have a weekly review. Did you follow your plans? Did your setup work? Did you break your rules? If you did, why? What led you to break your rules? If you keep breaking the same rule, maybe it's time to work around it a little bit because you're starting to know yourself a bit more. So winners review, guys, and losers hope. All right. And step 5 is to lock it in. All right, lock it all in, write it all down. I'm gonna write it down for you guys right now. Okay. All right, guys. So I'm going to be putting all this in the comment below, but pretty much these are the questions you need answered. Okay. So why do you trade? Is it an income or a return on investment goal? Funded account targets, trading frequency goals. So now these need to be realistic, guys. They're micro objectives. Okay. You don't put big objectives because It's very hard to know in trading. You guys need to learn everything. You put micro objectives. Today, this week, I want to not lose money. This week, I want to uh, utilize capital preservation as much as possible. This week, I don't want to break my rules. These are the type of objectives we're talking about here, okay? You can set bigger objectives like I wrote down here, but when we're talking about weekly, even monthly, even to like for next year, you guys want to make sure that you keep your objectives true to yourself and feasible, right? Number two, style and market focus. So again, are you going to be scalping, day swinging? You know, oh, I wrote it all wrong, but that's fine. Which markets are you going to trade? Are you going to trade London, New York, Asia, right? So you guys need to maybe answer those questions. They're very easy questions, right? For me personally, okay, I trade New York 9:30 to 11 a.m. That's it. I won't really go past that, and I won't really go before that. This is literally all I trade, okay? Then it comes to your strategy and your edge, okay? Your core concepts. You need your trend, you need your drawn liquidity. You're never long a premium, you're never showing discount. Off of that, what do you guys add on to that? You know, what's your entry triggers? What's your high time frame bias? What's your low time frame execution? Do you work on, again, if you're a swing trader, your high time frame is the weekly, your lower time frame is the daily and the 4 hour. If you're a scalper, your high time frame is the 15-minute, your lower time frame is the 1 minute, the 15 seconds. You guys understand how this works now? What is your invalidation criteria? So that means that what makes your trade invalidated? Okay. Uh, Number four, your risk management, your percentage risk per trade. Are you a straight up um h- how do I have to call it, like top step warrior contract trader, which means I always enter with three contracts no matter what. I always enter with two micros no matter what. Or are you percentage based like me, where you're going to risk X percent per trade, and so your contract size is going to adjust depending on your stop loss size. Me personally, I risk on funded accounts that are actually funded, I risk 0.5 to 1% per trade, and on evals, I risk $750 to $1,000 per trade. Yeah. What's your daily, weekly mass loss? Okay, what is your maximum amount you're willing to lose? And this number will fluctuate over time. Okay, so you need to be able to adapt this trading plan over time. Okay. What's your stop loss strategy? Do you go B? When do you go BE? When do you put your stop in profit? Where do you put your stop in general once the trade is taken? Okay. Do you take partial profits or you wait for full TP? Are there any account protection rules that you need to follow? You know, these are all questions you need to answer once again. Number five, trade management, manual versus automatic. When do you go break even? Do you scale in and out? Do you add into your position if you see another good setup, or do you wait for it to hit TP? Do you trail your stop? Again, these are all questions that we're already asking, but you guys need to have the answers for them, okay? Number six, your journaling and reviewing method. Are your metrics tracked? Do you have a weekly review structure? Do you track everything you do, okay? Do you write it down? Do you make sure that you learn from it? Very, very, very important to learn from your losers, okay? You learn more from your losers than you learn from your winners, all right? What are your emotional triggers? What's your pre-market routine? Do you reset your rules after a tilt or a loss streak? What that means is that you need to keep your mind straight. You guys need to find a plan that's going to help you with that. Me, I follow a very specific set of rules, and if they don't happen, I don't get in. This week alone, I've missed three trades that would have hit TP. Do I care? No, because I'd rather have a trade missed and go hit my TP than lose. I've realized that I go more on tilt when I lose a trade than when I get left out of a trade. So in my plan, I'd rather get left out than than take more trades and have them hit my stop loss more often. Okay? Very simple. When do you update your plan? When do you scale your position size? Where is your education development goals? Where are you learning? As a trader, you need to be constantly learning. I'm still learning stuff to this day. I'm in the charts every single day learning. Once you guys have all this done, I think you'll have a pretty solid trading plan. And yeah, on that note, guys, don't forget to like, comment, subscribe. If you guys enjoy this SMA series, let me know. I might do something else like this in the future. Who knows? I'll be dropping the SMA book, the ebook, very, very soon now. It's a special announcement at the end of this video here. And yeah, so have a good one, guys. Don't forget to follow me on TikTok and Instagram as well. I stream live on Twitch most mornings as well, so don't forget to watch that. And I'll see you guys in the next one. Peace.